Well, welcome. We are in Kansas City. The U.S. Meat Export Federation's meeting is taking place the rest of this week. We'll have a lot of details about the effects of the markets as we talk African swine fever and everything else that has been entailing in this trade. And Arlan Sutterman is joining us from INTL FCStone. And Arlan, thanks so much for taking some time to talk about what's been happening in this markets. And let's start first there with African swine fever. We know that this will continue, even though right now it is on the back burner to be a hot topic.
Yeah, it's been pushed to the back burner by some of the other issues, but not because its story has changed at all. We're still looking at a significant problem there. Hog feeding still down by 40%, and that's increasing. There's still no closer to slowing down the spread of the disease. That continues to be a problem. We've even seen one report this week that we could be looking 8 years before we have some type of a vaccine. So we're looking at least a 5 to 7 year problem in China, and that means they're going to have a huge shortfall in the world's most populated nation.
And this isn't something that's going to be cured overnight, and we know that it continues. It's been a year plus now for these Chinese producers, and for them to rebound that quick is not going to happen.
It really isn't, and because the virus is so long-lived. If it can live 6 weeks on your clothing, it can live a long time on pens, and we know in meat they've documented it living 399 days. That's because of the moisture that's there, and every hog feeding facility's got some moisture someplace where that virus can live. So to get the sterilization process necessary in the absence of a vaccination, it's just too risky for many of these producers to refill their pens right now. That's why they don't want to do it, and why we're going to continue to see a shortfall in meat production there. And pork has got an inelastic demand in China. The Chinese people love their fresh pork.
What's kind of taken the place on the leaderboard, shall we say, a leaderboard we don't want to have to deal with, is the thought of prevent plant. We know that every Monday when that USDA report comes out, we're not seeing as big of a jump as we're used to this time of year.
Yeah, farmers are so good at getting the job done when given the window of opportunity. That window has just not come. We're doing much better in Nebraska and Iowa than the rest of the Midwest. Outside of Nebraska and Iowa, it's been extremely hard to get the crop planted. And there are areas of the Midwest you can drive for hours without seeing a field planted yet. And we're getting the last third of May now. That shouldn't be. The crop should be planted by now.
As you look at those producers and as they try to decide how they're going to plant, we know that a report came out earlier this week. You're still waiting for real concrete information from the USDA, but how many producers are sitting back going, do I plant for the markets or do I plant because the USDA is offering some money up because of trade issues?
Yeah, every farmer that doesn't have his crops planted yet is asking that question, waiting to get some answers from USDA, hoping those answers come real soon. And they say they want to design the program so it doesn't influence planting decisions. If that's the case, the best way to do that is base it on past year's acres, past year's yields, but we're waiting to see if that's what they've actually done.
For those producers that have the crop in the ground, what should they be looking at when it comes to marketing this new crop, knowing the adverse conditions all across the upper Midwest?
Yeah, certainly want to be taking advantage of the rally. So you can do that by pricing and then use some of the tools out there to still participate in a rally, or protecting yourselves from a collapse of the market. Because the market will, if it does what it does in the past, it goes too far in both directions. So it'll probably go higher than what is justified at some point. So protecting the downside with some tools. But really, the bottom line is have a plan and stick with that plan. Have that discipline. Know what your break-even costs are. Know what the prices, when they rise above that, what they'll allow you to do. Set up that plan so when you see it hit those objectives, you understand the possible implications for your farm business. Farming is a great way of life, a great lifestyle. Make business decisions so you can stay in that lifestyle for years to come.
We know that there's going to be some struggles in just the next couple of weeks as we try to get this crop in the ground.
There really are going to be some struggles. The crop is going in late for the most part. But like I said, better in most areas in Nebraska and Iowa than the rest of the country. The crop's going in late. That increases the odds of low yields for both corn and soybeans. The stands are not good. That also tends to lead to low yields or lower yields. And so overall, the market's going to be debating this all season long. And we watch the crop condition ratings. And the first yield estimates this year are not based on field surveys as they've been done in the past, but on farmer surveys. The farmer tends to have a bias that things are even worse than what they are, so we may actually see the lowest numbers in that August crop report and then come up from that in September. So keep that in mind in the timing of your marketing decisions.
A lot of things, and of course, keeping communication open with their commodity guide. Don't do it by yourself.
Absolutely, partnerships work best.
All right, thanks so much. Arlan Sutterman joining us here in Kansas City, U.S. Meat Export Federation meeting continuing. I'm Susan Littlefield on the Rural Radio Network.